Hey, good morning. Happy Thursday. This is Jeffrey Scott. I don't usually do these in the morning, but I'm not usually on the road waiting to go to a meeting either in the mornings. I thought I'd talk a little bit about what I'm seeing in the market right now. Apologize for not having videos the last several days, but a guy does have to spend some time with his wife, and we've been traveling and meetings and dinners and having a great time. But the market, and excuse the peanut gallery. Um, so most money's made at bottoms. We call the bottom on April 7th. Follow through day, I think, was the 9th or the 10th. Most money's lost at the tops. That's why I let my stops take me out as the market goes higher. And when I start to have down days, I start to empty out. And I talked about raising cash, and I'll make a comment about that in a second. And what happens is, unlike a bottom, which can be an event, a top is a process, and that chopping process erodes gains. And I've learned the hard way. It is never bad to take off profits. It's never wrong to close half a position. And I've never regretted doing that, even if the markets went higher. You don't get rich by going up and down. You get rich by booking your gains. So, October 23rd, pre-market, Jeffrey Scott, Market MRI Pro at gmail.com, Google Group Top Down Trader, and website marketmripro.com. As always, this is for educational purposes only. I did want to show you this. Let me see if I can get my slides to work here. Okay. All right. I posted this almost a week ago. Know when to hold them, know when to fold them. And I'm never, one of the problems with, having friends who know you know how to trade or think you know how to trade and have had some success in the market or a lot of success in the market is they all want them to give you tips. And I'm always reluctant to tell people what to buy because you need to know when to buy them, but you got to know when to sell them. And I never remember who I tell things to. So why, if I give someone a tip and I don't tell you when to sell it, it's a waste of your time. And that's why this is so important. And last week, I started signaling what I was doing. And that's when I said you got to know when to fold them. And that was important. So educational purposes only. Intent of the video is to show you how I use my tools. Trading involves risk. I can buy, sell, own any stock I mentioned in this report. Always consult with your financial advisors. And if you like my tools, let me know. I've got them in multiple platforms. My Google group is the best way to stay in contact with me. It's called Top Down Trader. Go to Google Groups, look for all groups, sign up. It's free, and I even give you stuff like discounts on my tools. The meeting is coming up Sunday. I'm so excited. Small group, which means a lot of personal attention. I will try and record it and may figure out a way to bundle it or parts of it with the platform that people, when they buy the platform. So we spend a lot of time going over the the education and knowledge behind the little dots and squares and triangles, and then hopefully make people better at using the tool. But I really look forward to this. It's too late to come live. I could fit somebody in the room if you reached out to me, but I can take people still online. News and earnings always are important. And sometimes it's how things respond. Like, for example, one of my favorite stocks over the last year has been GE Vernova. Um, and it did not do well with earnings this week. I believe it was GEV. Was GEV? Yeah, it was. Earnings were yesterday morning. And when stocks have good earnings and they sell off, it's worrisome. I also want to point out that this dashed green is that we've got the CPI coming. Imagine if it shows a 3 point something annualized, and the Fed has to walk back their comments on cutting. What does the market do? I think rate cuts, two more cuts are baked in, and anything that changes that's going to cause turbulence in the market. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stocks earnings dates are scheduled. And we've got 2 or 3 more weeks where the calendar will look like what's it's above. Let's go take a look at what I'm seeing in the markets. If you have any questions about anything I say or do, email me at marketmripro at gmail.com. If you own the program and you've got issues with installation, virus concerns, coding at MRIPro.com. We're in the process of porting it to the Windows Store, Microsoft Store on your Windows computer, and that will make installation and updates a breeze. And more information on that to follow. All right, so let's take a look at what we see in the markets. And this is going to be relatively fast. I'm not teaching, I'm just retelling you what I see. If we look at yesterday's performance in the market and we rank it by 1-day close, you could see the VIX was up 1.5%, which really isn't much. Dollar was down, Spider led, but it was down 0.5%. The Russell was down 1.5%. The diamonds and spiders in the middle, and Bitcoin continues its lovely period of time down 3.59. Now it had bounced some, so over the last 5 days it's only down 3.1. Things actually finished in the middle of the range because there was a pretty massive, not massive, but a pretty significant rally at the end of the day to pair some of the losses. If we look at the new highs minus new lows on the NYSE and the NASDAQ, you could see that they've been paired significantly on the NYSE down to 22 and turned negative on the NASDAQ. New highs are not built on new lows. New highs in the market are not built on new lows of stocks. So as the new lows start to outweigh the new highs, I start to get more and more concerned. If we see what worked yesterday in the market on Wednesday, energy up 1.28, you had 0.5% up on healthcare staples and real estate. Those are defensive. If you look at what didn't work, you see tech at minus 0.99. It was down more earlier in the day. Industrials down 1.3, communications 0.87, discretionary 0.78. If you look at themes, very few things were up. Silver, MLPs, oil, gas, gold miners. That's it. Everything else was down. And if you look over here, you can see across the S&P 1500, the NASDAQ, and the NYSE, the percentage of sectors was down compared to Tuesday. Industry groups down compared to Tuesday, only 37% participation in the S&P 1500, 28 advances in percent in the NASDAQ, and 43 in the NYSE. It was a weak day despite the recovery. Now, the timing model's slow. The weekly model still says it's okay to be long. The dominant trend, take a look at these charts, is still an uptrend. So I get it if people are still long. Now I look at this and I start to see sideways movement and consolidation here. But we'll see whether or not this is a stays in the uptrend or not. If we flip to the daily charts, we can see it's a little different picture. Whoops, there we go. Let's see if I can. All right. Everything's resetting because I flipped to months and then to daily. Come on. All right. So you could see on the left-hand side, we have the spider and the Russell, and they're in sell signals. However, on the right-hand side, the Qs turned positive this week and did the diamond. So you have a mixed daily signal. You have a long weekly signal. So I don't think anybody could fault you for still being long, but you also have to look at other things as well. We're going to take a look at them. Here is that sideways move. And I had on the charts, took this really down day here and said, let us look at, you know what, this is, I just remembered, I have to do it in a different chart. But as long as I stay within this bar, I could think about direction that I want to be in. Maybe I can stay in the market, but a break above this long, below it short. And we're going to look at this across a number of different indexes as we go forward. If anything, this is mixed on the daily, long on the weekly, but I'm still concerned. Now, the guppy charts are long-term charts. And as you can see here, it's a series of moving averages on the major indexes on weekly charts. It's long-term stuff, but all the indexes are above all the moving averages. That tells me don't get too bearish here. So short-term concern, but maybe not long-term. And that fits the hypothesis I've had. Let's just dissect out the spider. So I like to look at these bars like this and tell myself that anything until we break above or below this, we are in chop. We are in a Darvas box now going all the way back to September, where we've hit the top of this range here, got close, had a doji and a reversal. One might expect to pull down here, maybe to the 50 and bounce. But I would have no trouble. And personally, I'm not going to be opening up a lot of new long positions, either until we bounce down here or we break above. So I look at the spider and I see chop. I see a market that will chew you up and spit you out. And I've raised a lot of cash. Probably the most cash I've had that I can remember, maybe since the bottom in 2020. If we go here and we do the same exercise, and you could argue the top, you hit it on the top, the wick, the body, but notice how we failed at that level, a doji and a breakdown. So are we going to pull all the way back down? Are we going to break out? That's what I'm looking for. So as I look at the markets, I see reasons for caution. Let's take a look at the dollar. The dollar has been our friend, and it's still our friend as it continues to fail at the 200. And as I've mentioned before, it is way off its highs. On the commodity front, has gold seen a top? We had a pretty massive sell-off day, and I don't know if it was one of these days, I said gold feels like a climax run and that it was due a pullback. And then we set all-time highs on gold and silver, and then we had a little bit of a sell-off here. Now, pull back to the 17, broke the 17 here. Are they done going up? Well, the forces that got them here are still in play. So it wouldn't surprise me to see a resumption. But after a blow-off top, I wouldn't be surprised we pull back to the 50. Oil trying to rally, but it's still below the 200, and natural gas is way below the 200. If we look at the 10-year and the 30-year, a silver lining, they've been selling off as well, below 4% on the 10-year, well off of 5% at 4.54 on the 30-year. On the buckets, there's no signal here. There's nothing here that says we are so oversold that we're going to bounce here. Clearly, we have more stocks in the lower part of the Bollinger Bands, because we've been selling off, but we haven't had an extreme. On the market breadth tool, you could see that we have had sort of a complex here, a higher highs and higher lows and a breakdown. And now we don't have higher highs anymore. We're almost coiling here, which tells me we're going to go a lot one way or the other. The question is which way. Stocks above the various moving averages are more neutral here. They're not high, telling me that we're too hot. They're not too low, telling me we're going to bounce. New high, new lows were mixed. AD lines negative and up down volume negative, even though it was a modest down day on the indexes, but probably worse at the individual stocks. No additional signal here. On the big market breadth tool, I look at this green line, which is my 13-week new high, new low on the various indexes, and it's in the 60s, 36 here, 56, 65. None of that is a signal. When it gets below 5, we're going to bounce. When it gets above 90, 95, we're going to pull back. It's neutral. So now I'm going to start to look for divergences. It's one divergence that's positive, is you are seeing a rising AD line on the S&P and an AD line on the S&P 1500 that are rising, and the market's going at best sideways. So that's a positive divergence. That might be one thing. And you can still see in some of these that we're actually getting off the bottom still some more stocks above the various moving averages. So it's turning more mixed on the divergence side, which is good because you'd like to see those positive divergences, or as my buddy John Person calls them, convergences. You like to see those as the market pulls back, because that's a sign that we're going to go higher. So I'm going to summarize my thoughts here by saying choppy markets suck. And I have watched erosion of profits at tops enough times that as I think we're approaching a top, I pull back. I do mostly options and short-term equity trades. So I don't really care about long-term or short-term tax rules. I do what's best for my trade. And I have raised a lot of cash here. I mean, simple to say. And I've had a pretty significant performance, as people who watch me know, off that April bottom. I don't want to give it back. So that's why I took a lot of profits. But again, I'm a short-term stockholder, 2, 3 weeks, maybe a couple months longest. Options, I usually go out 6 to 10 weeks in duration. It's all short-term gains. I don't get penalized worse than short-term interest or taxation rate. So and that's actually helped my trading to stop worrying about the impact of taxes. On the JS layout, if you think I'm going to show you longs, I don't know. I really don't want to. 3848 stocks made the screen. On the top-down picture, you could see a sea of green. If we look at 2 days just to see what's up at the top, real estate, defensive, and healthcare, and even healthcare was negative on the day. If we then rank by percentage return, here we go. And we go top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What's in this? Tobacco, some medical, REITs, more medical, packaged foods. This is the land of safety. I mean, I am a cancer doctor. Therefore, by definition, I have a hard time buying tobacco stocks. But they really do well. I mean, I think, is Altria still MO? I got to clear that, sir. I mean, these are great things to buy in bad periods of the market. Now it hasn't rallied yet. Maybe that's telling me something. But I bet if we see here that has a good dividend, 7.62%. So you could deal with almost a 10% pullback over a year, mitigated a lot by a dividend. But, that's not what I'm going to buy as a cancer doctor. So let's just look at 2-day return here and look at some at the top. Intuitive Surgical, robots. I had surgery a year ago, not to be overly personal. I was out of the hospital within 24 hours. It was major surgery. It was done by robots. I was back to work in a week. And that's not how I remember it from going to med school. They do make a difference. It's a volatile stock. If we put it on a weekly, you can see how high it's been in the past. So it's off of its recent highs. But I wonder if they had earnings come out, because doesn't that look like an earnings-related move? And we could see in the program earnings were out October 21st, a 20% surprise on earnings and 23%, a 4% surprise on revenue. That's a beautiful thing. And the stock certainly reacted. HCA, I think of owning hospitals in a nice uptrend, unlike the payers, which sold off hard. McKesson, I've always talked about this, Core, and Cardinal. How many times do I talk about them? Buy these in times of increased volatility. Let's go back to a daily chart, and we're looking at all-time highs on, I don't want 5 hours, my apologies. 3, 2, 1, hit enter. So let's go back and look at ISRG over the same period. It looks basically the same. HCA, nice uptrend. McKesson, at all-time highs. There's a reason why every time the market pulls back, I talk about McKesson, because it goes up when everything else goes down. Healthcare services group, nice gap up. Do they have earnings? 1022. Surprise and surprise. Why do I look at surprise? Because everybody knows what their projected growth is. That's already factored in. It's the surprises that I think that make the market move. And then I just want to mention Hologic for 1 second. I talked about this over on the weekend. Why did I talk about it on the weekend? Because right here, it had the double momentum signal. Now, you could have bought it before the end of the day on, was it Monday? Yeah, I talked about it over the weekend, so you had time to buy this. There's Monday, Tuesday, Wednesday. No, that's Monday, Tuesday, Wednesday. So it gapped up, but I think I talked about it Thursday because it was coming out of a squeeze and met those criteria in that trade. Why has it done well? Because it got taken out. So people back here, certainly on this bar here, must have known the thing was being taken out. Not to say people trade on inside information. It's none of my business. All right, let's just go flip and go into the larger impulse view and see if anything passes our fancy screens. The A+ screen, which would have picked up Hologic on Friday, actually on Thursday. AVY, Avery Dennison, old name, I think of mailing labels. Now, I don't like buying stuff off the bottom, and this is clearly off the bottom, but I do like this idea. A big move through the 200, massive volume, double dots, relative strength, and OBV looks good. And 1022, surprise on earnings. not a big grower, pays a small dividend. I guess it's kind of a relief rally. I put it on the weekly, see where it came from. And yeah, this thing has sold off quite a bit. Um, and maybe you're buying off a double, triple bottom area. HGV, Hilton Grand Vacations, break above the 50. Hilton, so there must be something with hotels. I can tell you I'm staying in New York right now in a hotel that's considered a JW Marriott, but is a dump, DUMP, a bear market for this hotel. And it's sold out and charging $1,000 a night. So maybe that's why the hotels look good. And then Pegasystems is a sold off technology. So this is the scan that requires a number of things to be there to trigger, including it's got to be relative strength and OBV coming out of a squeeze with either momentum or a breakout signal to make the scan. The other scan is the A scan, which is the double momentum scan. And this has picked a lot of winners. You can see there's a few more here. I'm not going to go through all of them. It's interesting to start seeing energy stocks making the list because for so long, energy has been out of favor. And over the weekend, one of the ones that made the list was Halliburton. Let's just take a look at Halliburton. And, it's hard to buy things that are destroyed, but eventually these things could probably come back. And Halliburton doesn't have earnings growth, which is bothersome. Revenue is pretty stable, pays a dividend, but these stocks have been beaten up for so long, maybe this is market rotation. So be careful out there. Don't be a hero. Chop will ruin your year. Yes, I expect us to go higher by the end of the year, but there's no guarantee of that. And I'll do a video probably not until Tuesday night as I got my class this weekend. So have a great next couple of days.